Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your midday market update for Wednesday the 12th of October. Well, tonight's our TV show, MarketClub TV, so this is our phone line, 410-867-2100, extension 129. Call us with your questions about the market, about our tools, about MarketClub in general, whatever you want to talk about. We'll talk about your questions live on air tonight at 5 o'clock, so stay tuned for that show tonight. But Harrisburg, Pennsylvania, seeks bankruptcy. Is America next in line? You know, it's not difficult to believe that Harrisburg, Pennsylvania is filing for bankruptcy with an overwhelming debt of almost $500 million. It just shows you once again that politicians have no clue when it comes to spending money, particularly when it's someone else's money. The question we must all ask ourselves is, what's next? Who's next? In the state where we have our company, Maryland, they have a $20 billion unfunded liability for entitlements. I'm sure it's the same across the country. We have had reckless politicians spending too much money and not being able to be held responsible for when things go wrong. You know, it's interesting what happened in the Ukraine, in Kiev to be exact, where they are jailing their former Prime Minister, Yulia Tymoshenko, to a 7-year jail term for abuse of power during her time as Prime Minister of that country. Just imagine how that would play out in other countries, including the United States. It certainly would make politicians think before committing and spending money that we don't have. At the moment, no one is held responsible, so it doesn't matter, and there's no downside for any politician that just says spend more, spend more. It also looks as though the politicians in the Eurozone have once again kicked the can down the road. Why? Because they can and no one's responsible. This just moves the financial disaster to future generations. Again, no one politician wants to assume responsibility for creating the incredible amount of future debt that they have for future generations. So what does this all have to do with the markets? Well, as usual, we rely on our trade triangle technology to keep us in the loop and in the markets at the right time. Now let's go to the 6 major markets we track every day and see how we can create and maintain your wealth in 2011. So go straight to our markets. Here's my home page. You can see just here that markets, the Dow's up a ton, NASDAQ, S&P. What's going on? These markets were all rallied from very oversold. Part of it is because they feel that the European situation has been solved, and you have gold up as well and the dollar down. So let's go to the charts in my portfolio manager, and here we have, let's just go to the portfolio manager right away. So here we have S&P 500. That's moved to a 55, a minus 55, and we know what that means. That means there's a trading range. And you can see right now we're at getting close, very close to the top of the trading range. A couple of things I want to bring to your attention right now is that our weekly and monthly trade triangles are negative. Okay, you can see we've had this huge kind of like move around here over the last, since August 8th. Pretty much we looked like we're going to have a move down. We came right back up. But look at the volume on this rally. And I'm going to go back down to here. Look at the volume, very low volume all the way up. We're also getting close to the top of the resistance level and also the Donchian trading channel, and we're overbought. So I'm guessing this market's very close to making a turn. I don't think we're going to see it go much higher than we are right now. I would be surprised to see it go higher than this. If we close, certainly get a signal on our trade triangles, that's a different story. But right now our trade triangles are still very negative. So this is what we're looking at in this market right now. So let me get my telestrator on, and we'll just go through the quick motion here, and we're going into this market a little further in detail later on with our 5 p.m. show. But here's certainly resistance. You can see right here, just right across here. So going from this level, the 1212 to 1220 area should be enough reason for this market to stop. We may see this. We may see something later on today. I don't know. It's still early. It's still 1 o'clock. But you're also heavily overbought, much like we were here, and to a lesser extent here. Now, when the market was coming down like this, the volume was actually going up. So when you're coming up like this, the volume is going down. Not a very convincing sign. So I'm expecting this market to turn around after the enthusiasm has all worn off with the possible settlement in the Eurozone. So let's clear the screen again, go to our next market, and the next market is going to be silver. And silver is really kind of hasn't gone anywhere to speak of We're at about a 10-day high right now. We are overbought. You can see right again we've gone from an oversold condition to overbought, and we're getting towards the high end of the Donchian trade channels. Now the trade channels are very, very interesting. If you watch them carefully, you'll see we talked about the show. When you go out of the trade channel like this, and here it tends to come back in, and vice versa. So you go out, come back in, and this is obviously an extreme move. So it just shows you need some other signals to get back in. But here we had the signal, the market was very oversold, came back up. We had a little green triangle kick in at 31.39, so it basically said this is okay, maybe we've turned around, at least for the moment. So nonetheless, the trend still is negative in our eyes. We've got the monthly and the weekly still negative, and even though the market's sort of gone nowhere for the last 15 days, we still want to maintain a negative view on this market. Now, it's a little bit different on the other market we're going to look at, which is gold. And the gold market is basically moved at a 15-day high. We're right in the midpoint of the Donchian trade channel. We have mixed signals here. The monthly is still positive. We've been talking about this all week. The monthly is still positive, the weekly is negative, and the daily is also positive, indicating a mixed bunch. We're now at 75, so it's a slight bias to the upside. But if you go down here, you can see we're very overbought, and also there's no volume because this is spot. And you're just seeing a turnaround in the MACD. So again, it's something to pay close attention to, as I think we're going to get maybe a further pop in this market. So let's pay close attention to the gold. But at the moment, it's really sort of building a sideways action here. So maybe building a small energy base to maybe challenge the 1800 level, which could well happen. If we go back on a simple Fibonacci retracement, and we'll go from the highs, which were right around here, the 1913, 1914 level, to the lows, we could certainly see this market getting back up to the 1726, 1772. It seems like a lot, and maybe $80, $90 is a lot of money, but it's certainly, the market hasn't proven that yet. It's getting there, though, and that's something to watch very closely. So let's take this off the screen, go to our next market. Now, the next market is interesting. This is crude oil, and we think this market is basically trying to turn around to go back down. It hasn't got there yet, but look at our trade triangles. They're still negative on the weekly and the monthly, so the longer term and intermediate term are negative, indicating we could probably see this market come back down, and certainly the Donchian trade channel is getting down, it's stepping down, so I think we want to pay close attention to that. Also, if you go to the overbought situation, we're overbought, and also we have not seen a lot of volume on this rally. It hasn't been bad, but it hasn't been outstanding. But nonetheless, the line of least resistance, at least for the moment, seems to be up, but we seem to be faltering because this is the first time that the crude oil market hasn't made a new high. Now, it's still early yet. We may still see it. The equity markets, we've said, it's been very closely following the equity markets. If the equity markets go up, crude oil has been going up. And you can see the same pattern in the equity markets. However, this is the first day it hasn't really done that. So I'm a little bit suspect we're sort of making a potential turn to the downside, which is just rolling over again. It's not there yet. But if we were to close, let's say we were to see this come down as a little red thing and close down here, I think that would be, if we would see the market close lower today, I think that would be a little bit of a negative sign, or at least the first indication that we're going to go down and test maybe the 80 level again. I don't think we're going to see this market just shoot up to the upside. I just don't think it's in the cards at the present time. So let's take everything off the screen. Clear. Go to our next market. And the next market we're going to look at is the dollar index. Now, the dollar index is very, very interesting. I'm going to move this back. Let me clear that screen off for you, first of all. Moving this back. So you can see basically our trade triangles are still very positive longer term, both the weekly here and also the monthly. Now, from 76.61, we're back to 76.92, so it's come back a long way. But we are at the bottom end of the Donchian trade channel. Not to say it can't go lower, but given the fact that we're at the bottom end of the trade channel, we're oversold, I think there's a good possibility that we're going to maybe bounce around here and maybe see another push up. I don't think it's over with on the upside yet. I think we've seen some staggering from our target zone, which was 80, and we got very close to that level. We got to 79, 83, just 17 pips away. and we've come back down. So I think really around these levels, I think we may see the market just begin to round out a little bit here, see more two-way action, and then I think we'll see a little pop up here. Right now, everything's favoring this market on the downside. Certainly our short-term indicator, our daily indicator, is negative, and that's worked out well. But nonetheless, the longer-term indicator, the monthly and the weekly right here, are still indicating this market should be resuming its uptrend very soon. So let's clear the screen again, go to our next market. And the next market we're looking at is going to be the CRB Reuters Jeffries Index. And again, this is in an area, we've talked about this yesterday, and I'm just going to draw this on the screen so you'll get a picture of what we're looking at. And that is, we've got, this is the previous low, and as we just scoot this across here, I'm not very good at drawing freehand with this, but if you're looking at the, this is around about the three, oh, hang on one second. Let me just clear this off here a little bit. This is around the 316 level. And we thought resistance would come in right around between the 310, this level around here, to these areas. So I think that's going to be very careful. Now, if we close below 310 today, I think that's probably going to put at least start to make this market turn over. Again, we've got our indicators, our technical indicators, the trade triangles monthly and weekly negative, so that's a big N there. And the only one that's positive is the daily. And we don't pay too much attention to that because it's overpowered by the longer term trends. We also have the markets overbought, you can see right here, much like it was overbought here. So I think we're getting very close to making that turn. It's been a surprisingly strong market in the equity markets, of course. I think a lot of people were short, and I think they've been short covering as opposed to new buying. I think that's part of the reasons why the volume has been so low. But hey, that's just how things work out sometimes. So let's clear the screen again, and let's go to talk about our show tonight. And the show is going to be on at hold on. The show is going to be on at 5 o'clock. We'll obviously rebroadcast it, but we'd love you to call in. Call MarketClub TV, the phone line, 410-867-2100, extension 129. And we'll do our very, very best to get your comments and questions on the air. So we're very excited about the show. It's a fun time. We like to interact with our members and possible new members that will come in. And just remember, we have a very special $8.95 special right now on MarketClub. You can try MarketClub for the first time for just $8.95 for a full 30 days. And also will automatically enter you to win a touchpad and a potential to win a 1-year membership to MarketClub, a free membership. So you don't want to miss that. So give us a call, MarketClub TV, 410-867-2100, extension 129. And I'll see you on the show tonight at 5. And of course, I'll see you tomorrow at 1 o'clock. Have a great day trading.